Stick with the overall market. I think the market is running up against a little bit of all-time high resistance. The S&P didn't get there. The Dow didn't get there. The NASDAQ certainly did. And I think that's what we really see today. That and, of course, UTX and IBM certainly weighing on it because it's a price-weighted index. And, of course, these high-price stocks really weigh on the overall index. But I think if you really step back and realize that we're still very early into the earnings season. So, about 85 companies have reported of the S&P 500. That's a very small percentage. So far, about 70% of those 85 companies, though, have beaten expectations. 5% have come in line. So there's still a lot of potential.
I'm very nervous about this market. Am I still long-term bullish? Absolutely. Have we had a significant correction that adds to the actual overall health of the market? No, we haven't. Right now, I'd be buying VIX in anticipation. Yesterday's leadership was very narrow and very focused, which gave us the strength of the upside. Today, same thing on the way down. That's not very healthy for any market.
So watches, we'll get some commentary, right? We probably won't get quantification. They're not going to break out the numbers. It's kind of a luxury. It's icing on the cake. So probably won't get details, but you can back into the numbers. Our view is in June, watches were weak in Taiwan. And so I think Apple Watch got off to a slow start because they have a component issue. I think you get to the holidays, this is go-to.
Oh, you think there's a component issue? That's what's really holding them back?
There was a component issue at first. It's resolved.
Right.
But because of that, remember, they only ramped in 9 countries. By mid-June, they had only been in 9 countries. If you were an iPhone, you probably would have been in 70, 80 countries. So it got delayed, and that impacted the supply chain.
This big bearish to bullish reversal looks very similar to the bear market that Apple had been in from 2007 and 2009. This is the roadmap that we're playing by. And I think we're at a point very similar to mid-2010. And the stock was very extended then, spent about 5 months trading sideways, let its 200-day catch up the price, and then inflected higher again. That advance started, continued, that bull market continued for Apple. I think we're at a very similar juncture where, once again, after the big breakout, the stock has spent, again, 5 months to exactly almost trading sideways, has allowed that 200-day to catch up the price. And I think this week's inflection is going to reinvigorate the advance. I think the Apple is set up to start making new highs again. We're looking at 145 on the upside.